Hi, and welcome to this week's Property Insider video, where Dr. Andrew Wilson and I discuss what's been happening in our property markets, and boy, have there been some significant changes over the last little while. Dr. Wilson's going to give all the latest property market data and some interesting insights into the unemployment figures as he digs into what's really happening there. We're going to discuss the Reserve Bank's comments that the recession could be over now, and an interesting report that Melbourne property values may have dropped 14% this year. Really? Well, you'd better watch to find out. If you like getting the latest property market data, please subscribe to this YouTube channel and click the little bell icon so that we can keep you up to date every time a new show comes out. Only last week I mentioned how some people are calling this the weirdest recession. I explained how we're in the middle of a pandemic, unemployment is rising, not as much as some thought, yet our housing markets, they've remained resilient. But now there are clear signs that the modest coronavirus-induced housing correction seems to be coming to an end and our housing markets are on the move. Earlier this week, Reserve Bank Deputy Governor Guy Debelle said that the Reserve Bank now believes the country's first recession in 3 decades is over. The Reserve Bank said that it probably ended in the September quarter because growth in the rest of the country was more than the drag from Victoria. And this week, with Melbourne's lockdown easing, consumer confidence and business sentiment is rising. Of course, many of us are also anticipating that the Reserve Bank's going to meet next Tuesday, Cup Day, and as it's often done, lower interest rates a bit. So it looks like we're having a perfect storm developing for our property markets in next year, 2021, especially when you consider the various federal government incentives, the state government proposed spending. So I'm looking forward to discussing all these matters with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. And of course, he's going to give us all the latest property data. Hi, Andrew.
Yes, hello, Michael. Interesting times continuing and a lot of good news down south of the Murray River in terms of easing those coronavirus restrictions. So it's not quite that the war is over, but things are certainly looking a lot brighter than they have for a long time in Victoria.
Well, in not just the property market, but we're able to get out, we're able to go to shops. But things are, as you say, are still limited, but it's definitely increased consumer confidence. So let's see what's happening in our property markets, please. Okay?
Yes, Michael. Well, it's the week that was in the property market. So let's have a look at the past 7 days. We start as usual with the weekly auction market update. More strong results really across the board last Saturday. Sydney, another strong clearance rate. Will we get an 80% clearance rate in Sydney before the end of the year? Certainly the trend is showing that might be the result. Strong listings again. We always mention that a lot of those listings are online auctions, which is a little different to last year, but nonetheless, nearly 80% clearance rate in Sydney. Sellers would be pretty happy with those results. Melbourne rising again at the weekend, both in terms of the number of properties auctioned and also the clearance rate. Auction numbers more than doubled in Melbourne. A long way to go compared to last year. And that big number of last year was pre-Cup Super Saturday, which is always just about the biggest day of the year for auctions in Melbourne. But Melbourne auctions will rise again, close to double this coming weekend. But certainly numbers are lower than where they were. But sellers would be happy with those results pushing up towards 70%. Brisbane, a strong result. Brisbane auction numbers down on last year, but certainly clearance rates are high in a relative sense in Brisbane. Brisbane always struggles to get over 50% clearance rates. It has a different auction culture in that capital city market, but so 64.7 is quite a good result for Brisbane. Adelaide, low auction numbers, a little volatile, those clearance rates with a small number reported, but nonetheless a high result. But Canberra's the market that's really been steaming along this year. Another strong result, over 80%, and from high listing numbers as well. So auction markets, again, revealing, I guess, the positivity of the spring selling season so far and the upshift in the Melbourne market since those physical restrictions were eased a fortnight or so ago. Those are the physical restrictions on property inspections. We can see that Sydney clearance rate trend onwards and upwards, pushing up towards that 80% mark. Top performing region in Sydney on the weekend was again the Northern Beaches. It really has been a popular area for buyers this year compared to other regions, but 6 out of the 11 regions recorded clearance rates above 80%. So the spread is quite even, and good results there across the board for regional sellers by and large as well. The top property sold in Sydney was a house in Anglesey Street, Bondi, went for 5.2 million. Another property in Wahroonga there up over $5 million as well. Melbourne's clearance rates, we can now start to chart them again, that we've moved past the period where we basically had no auctions to report. And you can see, obviously, that trend is upwards following the depth of the shutdown a month ago. A top performer in Melbourne was the western suburbs. Again, with the exception of the northeast and the southeast, most results were quite reasonable there. Again, numbers are small and we need to wait for higher numbers to get a better picture. But those results are quite healthy there, given the nature of the Melbourne market as it's come out of lockdown. Top property sold in Melbourne. A home in Collingwood Street, Sandringham, went for 2.7 million. We can see coming forward now from the depth, if we look at projecting Melbourne listings, again, will rise over the next fortnight. And we won't get to those 1,000 auction weekends. That's unlikely this year, but certainly lots of properties compared to where we were during the shutdown, predictably. New listings, which we look at every week, we can see that new listings have fallen away during that. Remember, we had the Melbourne Cup, the AFL Grand Final long weekend last weekend. Holiday impacts tend to push down the number of listings coming into the market. That's some seasonality. But I also think that there's a little bit of response to the surge that we had from Melbourne listings coming into the market after those physical restrictions were eased 2 weekends ago or 2 weeks ago. So, but still levels are just below where they were at their peak prior to the shutdown in terms of new listings. When we compare new listings to the same time last year, giving that falling away over the last few days, that we're now tracking below the line compared to a year ago, but it's not too dissimilar. And as I said, there are some seasonal factors there and also some coronavirus Melbourne factors, shutdown factors there that are at play. But by and large, I think our new listings, tracking at similar levels to a year ago. Melbourne new listings weekly change down 18% from what was a very big surge the week before. New listings by and large steady or rising in the other capital cities over the week. And we can see now that that's that differential between new listings, Melbourne versus Sydney, over the past 2 weekends. Melbourne down around about 15% lower than Sydney with those new listings, but coming from, I guess, adjusting from a very high performance the week before. Total listings are steady or falling in most of the capital city markets, basically steady total listings. This is the total properties listed for sale. Melbourne is higher over the increased total listings over the week compared to the other capital city markets. Total listings, Melbourne's still around about 4% lower than Sydney, and the relationships are pretty steady in terms of Sydney's volume of total listings, get that right, compared to the other capital city markets. Let's have a look at new sales. New sales are strong in Sydney. These are newly reported sales over the past week. It's held their own after a very big rise the week before, nearly back to their peak levels of new sales at the beginning of the year prior to coronavirus. Melbourne rising very strongly again, of course, considerably lower than where we were at the beginning of the year, but trend is clearly upwards. And I think that shows that revival well and truly underway, not just with listings, but also sales, newly reported sales. And Brisbane's been the strong performer this year of all the capital city markets post-coronavirus shutdown. And you can see there that Brisbane new sales are well and truly above where they were at the beginning of the year. But we do know that the second half of the year is typically the strongest period for the Brisbane housing market. New sales index with that big rise in Melbourne, up 22% in sales over the week, was the top performer. Sydney new sales steady after a very strong performance the week before. In relative numbers, of course, new sales, Melbourne's still well below Sydney, just over 40% lower new reported sales this week compared to Sydney, but they're certainly catching up, but from a low base. Looking at Melbourne overall, new listings were down 18% from that strong result the week before. New sales surging, though, this week in Melbourne. Total listings up 8.6%, but still 4% below Sydney results. So a quick look at the economic environment over the last week. Stock market just easing a little bit towards the end of the week, but still levels are tracking at higher points than they have for most of the post-coronavirus period. Australian dollar reacting. That volatility, I think, reflects the sentiment in terms of the expectation of an interest rate cut. Of course, last month, if we look back a month, we can see that there was some speculation that rates would be cut. It didn't occur. The dollar rebounded as a result. But over the past week, certainly the speculation has been a lot stronger. And I think it would be a surprise if we didn't get a cut in interest rates on Melbourne Cup Day for November. And I think that's almost been factored in as a certainty. So that's why we're seeing that dollar perhaps recover. And after the initial bedding down of the expectation of an interest rate cut, an almost certain interest rate cut on Melbourne Cup Day. Last week, we looked at the overall unemployment data for September. Let's have a look at the state results, just to break that down a little bit for some context. And there's not a lot of difference between the unemployment rates of the major capital city markets. The smaller capitals are certainly doing better. And of course, a lot of the unemployment rate numbers impacted by falling jobs numbers and also the number of people participating in the workforce. So we need to take those unemployment rates with a grain of salt and in the context of those changes. So let's have a look at some of that context. So over the past 6 months, since the coronavirus shutdown started, this is the position of employment changes in each of the capital cities. You can see Sydney still down 50,000, similar to Brisbane, down 50,000 since over the past 6 months. However, of course, no surprise, Melbourne's employment numbers have fallen dramatically, down by over 200,000 by comparison. And if we take those all as a proportion of those totally employed, we can see that Melbourne's lost around 7.7% of its workforce, its working force, over the past 6 months. Sydney and Brisbane, a much smaller margin by comparison, also Adelaide and Perth. But I think that tells the real story there. And I think that will likely be, given the shutdown issues, the base or the bottom for the Melbourne decline in the number of working, of those employed. And I think that those numbers, which continue to climb quite strongly in Sydney and Brisbane and Perth, will decline as a proportion of jobs declined since the coronavirus shutdown. So that's all from me in terms of what's happened in our housing markets and our economy over the past week.
Well, that's fascinating when you dig behind the unemployment figures and you see how many people are actually in the workforce. So a lot of people have left the workforce. That alters the unemployment numbers. The participation rate is different. And also, Andrew, a lot of people who are working aren't working at full capacity, are they?
No, that's right, Michael. But I think any job's positive given all the uncertainty we had. And as you mentioned, the Reserve Bank's a lot more positive now about the outlook. And really, we might have had obviously an even stronger rebound if it hadn't been for that lockdown in Victoria, which of course is a substantial part of the national economy.
I read something really interesting just before we started recording this, Andrew. It was a report from the electronic settlement platform, PEXA. That's where transactions now occur, conveyances occur electronically rather than solicitors hand over physical written titles, paper titles, when a property is sold. And what they've said is from January to September, the overall median price of settled properties fell 14% in Victoria and 9% in New South Wales. And in my mind, that's just another way of incorrectly interpreting data. Now, these figures are more a reflection of the type of properties transacted this year rather than the overall change in value of a particular property's value. Sure, median price of transacted properties dropped, but it's generally the lower end properties, the cheaper properties that have been selling this year. I think many homeowners with higher end properties, they've often got substantial equity in their homes. They bought them 10, 15, 20 years ago. They didn't want to, or they didn't need to sell in these uncertain markets, Andrew.
Well, Michael, we've obviously got to question the methodological approach from all these groups to produce house price data and reports. That's a period, it doesn't capture the normal annual, seasonal, quarterly process. I mean, are we capturing all the sales in the market during that period? As you say, has it been adjusted for compositional mix according to the level of properties or price levels of properties? And is it capital city? Is it state? I think you'll find when the ABS data comes out for that period that we'll see a more refined measure of property. And I still believe that on those, I guess, accepted measures from particularly the ABS, that we'll find that most capital city markets, Melbourne being the exception, are on track to finish above the line at the end of this year compared to where they started at the beginning of this year.
Another interesting statement that came out this week was from the Assistant Reserve Bank Governor suggesting that the recession could well be over. Of course, we won't know the figures for the September quarter for another couple of months,
Yes.
but it's going to help boost consumer confidence with all the other things that are happening at the moment.
Yeah, look, yes, Michael, and we shouldn't be surprised that the measures of economic activity will be more positive than predicted because everything else has been more positive than predicted, particularly a real measure of economic activity, which is the labour market. And certainly the labour market has performed as we saw just before, with the exception of Melbourne, and there are special circumstances there, as we know. But labour markets, all other states, have performed particularly well, and they're perhaps on track to have the level of labour market activity not too dissimilar to where it was pre-coronavirus by the end of this year. Of course, we shouldn't be surprised given that we're getting a lot more growth now coming through in the economy. And it'll show really that this was, I guess, a Clayton's recession. Could we say that? I'm not sure we remember what a Clayton's recession is, but it really has been nothing to do with the economic cycle by and large. And it's just been a pause, as it has been in our housing markets. We've sort of pushed the pause button. Now we have to get up and, now that we're in business again, more or less, recover to the best of our capability. So I'm not surprised really, Michael.
The average Australian consumer is now feeling more confident as well. This week, the ANZ Roy Morgan Consumer Confidence Index hit an 8-month high. At the index of 100, there's as many optimists as pessimists, and it's almost there, 99.7. So it's the highest level of optimism since almost the beginning of the lockdown. So fortunately, everything's pointing in the right direction. Looks like the year's going to finish off well, Andrew.
Yeah, and let's really celebrate what's happening in Melbourne, Michael. I think that's a great thing, and I think all Australians are pretty happy about that. So let's get these borders open and let's get back to as close to normal as we possibly can be. And also let's give Australia a really big tick overall for how they've performed, not just in terms of the virus, fingers crossed, but also particularly the economy, and more particularly, of course, the housing market. Should we be surprised at that? I'm not sure.
Well, in the past, I used to say we're living in the best time in history and in the best country in the world. Maybe it's not the best time in history, but we're still in the best country in the world, aren't we?
I think you're right, Michael.
Look forward to our chat again next week, Andrew.
Yeah, see you later.